All right, welcome Max. How you doing?
What's up, everybody? I'm just posting this on our Twitter or on our Instagram account real quick.
Yeah, give us a quick sec. We're getting everything set up for you guys. Looks like we've already got 4 people in here watching. Got a pretty amazing week coming up. So for those of you that are joining us, make sure you let us know. As usual, type in stacks into the chat so we know you're watching. Hit that like button so it can help us out with YouTube. Let the algorithm know that you guys enjoy what we're doing here. Real quick for you guys just to see, we've got a lot of big names. The big one after today's close would basically just be waste management. That's the only one. Oh, I noticed you did a Tilray one, so let's, or no, is it Tilray? No. It is, right?
I
You
did.
wrote one.
I was gonna say I wrote up Tilray if we want to watch that.
Yeah, let's have you talk about it before we go off into this, so that way we can get that. I know you wrote it, but I
Oh
think
yeah,
we skipped it
yeah. I know
yesterday.
we didn't do. I don't even think we covered anything because we didn't really find anything that was interesting. But I did like Tilray just because I indulge in the devil's lettuce here and there. As I'm sure you guys are aware. But let's go ahead and talk about some Tilray. So it's been a wild ride for this company so far, and not in the fun stoner comedy kind of way that I enjoy. After 7 years of slow burns, false starts, and plenty of dilution, the Canadian cannabis darling is down over 99% from its all-time highs. Yet somehow the stock just gained 105% in the last month. Because why not? Is it the beverage business finally clicking? Is it shorts? Is it going to be shorts covering, or is it the hope the DEA might reschedule cannabis in the US sometime before we all end up retiring? Now, for their snapshot, obviously earnings is today. They're expecting a 3% loss, which is 25% better year over year. But again, that's still a loss. Revenue, we're expecting 240 million, up 4.4% year over year. Very muted expectations and estimates for these guys. And recent revisions, they've had 4 revisions that have sent EPS down and revenue down, 0 up. So that's not a great kickoff to this in the first place. Now, with their segment breakdown, with cannabis revenue, we're expecting 67.4 million, down 6.4% year over year, ironically enough. Wellness, we're expecting 16.1 million, up 3%. Beverage and alcohol, 99 million, up a big 29% there. And distribution biz, 66.6 million, basically a flat 1.6%. They're pivoting hard into booze while the core weed business is quietly starting to fade with them. Now, why does this matter to the market? This isn't just key for Tilray's story. It's a sentiment litmus test for the entire cannabis sector. U.S. rescheduling hopes have sparked a monster rally across pot stocks. Tilray is a top retail name. A bad quarter plus weak outlook equals cold water on the weed is back narrative that they're trying to push, and a surprise beat plus bullish guidance can give it even more breakout fuel that it already has. Now, 3 things to watch on the call: U.S. regulatory commentary. So again, we want to hear about rescheduling, what's going on with regulations. If we hear some positive news out of this, that's great for their guidance in a sense. Cannabis unit trends. They can't hide behind beverages forever. Is the weed business shrinking into irrelevance? I think it's just getting diluted personally. And then guidance. Will they slash expectations again? Fiscal year 2025, they've already been cut once. Now, their bear case, core business is in decline. They've already lowered full year guidance. They're still burning cash. They're still posting losses. With regulatory change, that's going at a glacial pace. We haven't really seen any real updates. On the meme bounce, they may be short-lived here, and it could just be a quick run up, because if this does not come in good for them with their earnings, then we're going to expect even more of a sell off. Because remember, they're down, even though they're up 105% in the last month, they're down still 99% from those all-time highs. So this isn't really about numbers for them with this earnings report. This is more about narrative control and being able to spin that into some like hopium and reasons for people to dump some money into the company potentially. So that's what we're really looking for with Tilray. Again, we're not looking for finances. We're looking for those regulation updates and what we could potentially see here.
Yeah, very good. If let me show you guys just the chart. Chart looks real ugly. Big picture, huge market cycle. We are down in the depths of despair with Tilray. At one point in 2019, this was the highs over $200 stock. The highs were at 300 within 2 to 3 weeks. Almost a month of when it was first IPO'd. We are, like Max said, down 99% from those highs. Now, the question I want to bring to you guys is it time to possibly buy if this is the bottom? Taking a look at where we are, I would say we are starting to see a little bit of volume. Is it just the short squeeze from the bottom? Near the bottom, it was at 35 cents. It's almost doubled at this point, sitting at 68 cents. The thing that is rough about this, and yes, there is a bit of potential for this to start to rally higher, but I would say it's very possible that we're going to see the accumulations probably happen down here between 35 cents and about 60 cents. This automatic reaction that we have, if it is just a short squeeze, could potentially still go further down. The thing that I want to point out here is the financial, the bottom line of this company is terrible at this point. If we look at the annual net margin, negative from 2019, it was negative 192%. Got better, negative 71, negative 75. Dropped down in 2022 to negative 231%. And yeah, my dog doesn't like it either. Negative 31% as of 2023. Q3 2024, it dropped significantly. So, and also if you take a look at all the previous earnings since 2022, it's just been negative the entire way. Oh my God, there is one in 2022 when it had probably a big drop. It had a negative 1,000% on earnings. So until they're able to figure, their last one was also negative 2,200, so 2,200% in terms of their earnings. They got to figure something out here. The one thing in terms of that could bring some bring some tailwinds in for this to help it out is really just regulations. There was a lot of talk of it, with the previous administrations and things like that. There were, hints of it here and there, but it never really quite, got its footing in terms of getting itself back in, in terms of the markets, getting its revenues up. It just does not look pretty. If I were to pull up stacks, that's always a good indicator of what the big money is expecting. Pulling up Tilray, we don't really see too much going on. Back in May, we had some sells. Back earlier this month, we had a sell. No equities really being purchased in the dark pool. This name is, there's not much going on. So, I would probably say stay away from this name. Yes, there might be some hype with it when we do see earnings reported. You could see it squeeze up a little bit higher, but I would just say not the most appealing when it comes down to it. Let's take a look over at the options chain and see if there's anything.
Nothing really comes in with them, to be honest. And when you do, it's usually low volume, or it's like very, I don't know. Because their options are cheap, so it's hard to gauge like what's a big time bet,
IV is ugly though. IV just for this week. Okay, so the way I would look at this is I would not be looking at the weeklies to play an earnings thing for this. If you do think earnings is going to come out, if maybe you've seen Tilray brands at your local store and you notice it's always sold out or something like that, I'd probably be looking out for next year or even 2027 options. Those implied volatilities are a little bit lower. You could look for above $1 in terms of that. You would definitely be spending a little bit more in terms of your theta. But, you know, if it were to pop, if it were to get above a buck, your break-even point wouldn't be too terrible. Open interest on a lot of these actually seems to be decent, above the dollar on 2026, January 2026, 60,000 options on that. So the spread's actually pretty decent on it. Volume 1,000 for today. But I would just say stay away from the short term. This stuff, yeah, it's appealing because it's so cheap, you know, but not the prettiest situation. And even this, you know, 50 cent calls, break even is only what, another 2-3 cents higher. But I would still probably say, hey, buy some time with it. The 50 cent January 2026, 2027. If you do think that we will see some legislation that pushes this better, or, you know, brings more revenue to this type of company, then I would be looking at those long-term situations. Those definitely have a potential to be a big banger down the line, but as of right now, there's just very little talk about, you know, about Mary Jane in general, and it's not really something that's been flooding the markets or flooding the news cycle at this point. So, yeah, I would say worth a leap type of gamble if you think things are going to go well, but with previous earnings and what it looks like in terms of where it's at right now, probably not the best to consider. You probably would want to put your money somewhere else. But I like that analysis, Max. I like it. I see we've got 14 people watching right now. Let us know you're here. Type in stacks. Type in the ticker that you guys are here to see and here to watch. You know, here to listen about for this earnings. We will take a look at waste management and Tilray at the close. But today, what we want to do is get you guys ready for stuff that's coming up on Tuesday. We do have some stuff before the close. So let's take a quick peek over at that. UNH, SOFI, PayPal, Boeing, UPS, Spotify, Merck, PG. Oh my God, got a lot. Let's see if there's anything that came into the tape today that will help us make some better decisions. That's kind of what we want to do here.
I started highlighting some of these on Twitter as well. So like UNH, I caught that. I think it was a $300 call for September 19th, 1.04 million in premiums spent. However, it was a higher ticketed. I think their average was, I want to say, 1485. So I've been trying to slowly track down some of these options to see like what's going on, who's buying what, is there like an influx that's going to come in randomly, insider sells, all that kind of good stuff.
Yeah, let's discuss real quick how to read the tape a little bit. Just because when you type in a ticker, you're going to see buys and sells. Now, what I like to do to gauge more of the sentiment of direction is to filter for the buys. But let's talk a little bit about the sells. All right. In terms of the sells, a lot of times these are going to be hedges, or these are going to be situations in which they are actually acting as the market maker when it comes to selling calls. They might have plenty of shares, and in doing so, by selling calls, they are assigning that right to somebody else, that they're going to be able to sell them their shares of that when it does hit a certain level. So that does, in terms of, so sell of calls, you'll see it's a bearish type of move because they don't want it to hit that strike, okay? Or they want it to go below that strike for them to keep those options. So in this situation, the sell of these calls at 280, this is saying, hey, we're probably going to see below 280 in time, and that's going to give them and help them take that premium. You know, acting as a market maker, they want to see this eventually go down towards zero so that they could actually take that premium. They can act as selling those covered calls, you know, allows them to take a little bit of a lesser risk position. Now, in the selling of puts, it's the other direction. We like to say sell walls for these puts kind of says, hey, they don't see it going down lower than that number by that time as well. So here, what we're looking for, especially for today, today's 728, so you'll see all the ones that came in today. The sell of these puts, especially these two that are short term, 810 or 801 and 808, that's saying they don't necessarily see UNH dropping down below those levels by that time. So if we do see a sell-off, this guy right here that came in at 949, keep in mind I'm on the West Coast, they're saying they don't expect it to go down below 272. If they do, with the selling of those puts, they do have that option of purchasing those shares, and it's supposed to be a binding situation that if it closes by that, they will have to grab those shares from there. Now on the other side, we want to make sure that we take a look, and I like to filter for the buys and also peek over at the right. The right side is all our equities. It tells us how much has been purchased. There's nothing that came in for just today. So we're just going to focus on these two here. Since our live stream yesterday, we've had these two come in. We have $1 million spent, 1.02 for the 300 strike. So they're saying it's going to go up about $16 to $17 by September 19th. Same with the other one that came at about 11. So 310. So same time frame. Spent about $500,000, $520,000 for that as well. So these two, and if you just look at this is, consider it this. We had on Friday, we had the DOJ probe come in. UNH did release a press release saying that they're gonna comply. They're gonna release all the information they need for the DOJ, and they're confident that they didn't really do anything wrong there. So we still see continued buying for UNH, at least for the upside. So
yeah,
one of the things that is a famous saying from Warren Buffett is that, be fearful when others are greedy and be greedy when others are fearful. And so is this one of those situations? I think we will be able to see tomorrow. Again, we'll do a live stream tomorrow for Tuesday. We're going to review all of these earnings that we see here. But UNH leaning on the bullish side when it comes to what Stacks has to say. I would say leaning bearish on the sentiment side for the public, which I would say sometimes you got to use it as a reverse position. DOJ probe is definitely not good for this company, but from what Stacks has to say, there's upside to be had, and at least upside in the longer term. So I would say once they get this DOJ probe situation settled, we might see a pop from there. But the question is going to be, when is that going to happen? If the news just came out on Friday, so this could take some time. They've definitely got to get their lawyers in place, but for a company this big, I'm sure they've got their lawyers ready to battle it out. And lawyers are going to make a good amount of money too. So
well the probe started in February, so that's the thing.
February.
Okay. But basically, so what happened was DOJ started to probe into UNH in February. UNH basically was like, no, you're not, and acted like it didn't exist, and then decided to put up a quote-unquote fight. And then what ended up happening is this last month, they turned, or I think in June, they turned around and basically were like, okay, we'll comply and do whatever you tell us to do. So with that, it potentially could be priced in as well. Because when that initial report came out, I think that's when we saw the initial sell-off with United Healthcare. But now with compliance coming into play, that either A, means their legal team pretty much has this thing sealed up to where the impact it'll have from a revenue perspective is either A, priced in, or B, will be very minimal. Also, typically when companies start to comply, like for example, Apple's another reason of this, they get probed by the DOJ all the time. We see the stock drop when they try to play stupid, and then once they wise up and go, we'll comply, we always see those run ups again, and we see dark pools starting to get bought up and activity like that in the coming months. With UNH, I don't see this as much different. That big golden sweep I saw was for September, so it definitely has some time for us to get some news here in the next month. But again, this has been an ongoing thing. It's just UNH finally kind of switched their stance from we're going to fight this to we'll comply and kind of work through this together with you.
Okay. Yeah. Thank you for that. Yeah, I didn't know it started in February, but that definitely makes sense. And that actually aligns a little bit better with why we see all these calls coming in then. So we will check in on that tomorrow and see what ends up happening. If you're in our Discord, if you're in Stacks, I'm sure everybody will be discussing it as market opens tomorrow. So keep an eye out for that UNH. Next one, we got SOFI coming up. We talked about this yesterday. Let's real quick see if anything interesting came in today. Quite a few sells of puts, which are bullish. A few sell of calls here and there. But if you take a look at what's being bought, just for today, yeah, these are all earnings plays. We've got 2 puts for the end of this week, so they're seeing underneath 21. Those are already in the money at this point. We have calls for over 21, so they see it, but that's a fairly small position. And then another one of puts. So definitely kind of a mixed bag here. You know, with what we said was, you know, it's run up pretty hard, so there's more risk to the downside at this point.
I don't think there's a lot of downside because we got a goal. If you look at the sells for today, someone sold $20 puts for 1.16 million at a 250 average. So that could mean that they think they see a beat, or we see a fade into that $20 zone, and then a little bit of a post earnings run up from I would say 20 is probably where this big money sweep is looking at support for SoFi for post earnings. But this is also dated out a year from now as well. So it's for 1/16/2026.
Yeah. So SoFi, if you guys got a chance to look at what we had yesterday, did a full review of that as well. Let's continue. We got 5 minutes. I want to get to the rest of these. PayPal, see if anything came in. 2 sell of puts. So the sell wall at 65, so we don't see it going down below 65. September and January. So not much came in today since what we did yesterday. Let's look at Boeing. Puts, yeah, a lot of puts being sold today in terms of what we see. We got the calls being purchased for 919, 1121, above 250, above 280. Nothing in equities for Boeing. UPS. Just a buy of puts. That's the only thing. 100K in there. Last 2 prints are just puts. So UPS might see a little bit of a pullback. Spotify. Absolutely nothing changed. Still got the sell the puts, so they don't see it going down below 677 by Friday. Yeah. So Spotify might pull back a little bit and then jump up higher, or we could just see it head higher from there. Merck, MRK. Some short-term calls being purchased. Some puts being sold. So not below 81, aiming for above 87. I'd agree. We saw it's coming down in that channel and it's breaking out. So Merck could have some upside to it. PG. Just some puts being sold. Yeah, guys, we were seeing a lot of puts being sold. So remember, when you see those puts being sold, that just means they don't want to see it go down below that specific strike. In this situation, that's actually in the money for PG. So we might see PG actually pop a little bit if this, I mean, they spent $442,000 on it right there. And again, these are all the ones coming up for right before Tuesday, okay? Let's peek over at what's coming in after the close, see if we saw any sort of prints come in, possibly getting ready for tomorrow after the close. We'll also do a review. We'll probably get to it at 12 tomorrow, so give us an hour to get ready for the close on Tuesday. But Visa, Some calls sold, some calls being purchased. Nothing to be very determinate of what direction. Let's look at Mara. Some decent activity on Mara. Calls and big money on puts though. Below $10. Ooh, that's a big. I mean, by 2027, seeing Mara down below 10 bucks, $2.08 per contract there.
It looks like someone's doing capital preservation at $22. There's an unusual print, 85K for $22 calls being sold. This is a little more near term. It's for September 5th of 2025. So that could mean they don't see it breaking 22 by that point. So that could potentially set them up for a little bit of a sell-off here versus an earnings beat. Or at least that's how I would read it. Because I would say with where we're at right now, we're about a month out, let's just say. Anything that's 9.5, we can consider it a month out of seeing some activity. And with where Mara's at, I feel like we would see an explosion if they do see a beat on earnings.
Yeah. Starbucks. Nothing came in. Seagate. Nothing new. I want to take a look at Cheesecake Factory. Okay. We saw some Cheesecake Factory over 70, 525K for September, but that, we didn't look at this on Sunday. This came in last week. I mean, it's the only option print we see in here, so that's interesting to see, just because it is something that's not traded nearly as much. All right, we've got close coming up in a minute. Yeah, Morris said he's doing UNH and earnings play. Bought some time. March 20th, 2026. Yeah, $300 calls. Yeah, those are pricey. 3K per position. So definitely. Max is on point with the scandal timeline of UNH and CO rotation. Yeah, I think like we said, tomorrow before open, if they're able to calm the fears about the probe and give a better timeline as to when things should be over with it, this fearful sentiment that we have for UNH, I definitely would say has a bit more of an upside situation to it, or at least, the risk to the downside, I think, very likely has been fairly priced in so far. Before we show what's going on after hours, I do want to point out we did have 2 Stacks AI prints come in today. Oh, and I also wanted to point out this Etsy one as well. We do have Etsy earnings coming up Wednesday before the open. We're going to go over some Wednesday earnings today. But Etsy, that definitely gives it a little bit bullish sentiment. If you take a look at Etsy overall, we also do have the calls for the end of this week coming for $64. So that might be a play worth taking. $157,000, but Etsy, let's go over and pull up that chart really quick for you guys. Could this be where the bottom is for Etsy? It's very possible. There's been some negative sentiment toward it. I was having this conversation yesterday with one of the ladies in our cat rescue that we volunteer and help out with. My wife and I do a bit of fostering here in our house, and there's a talk about how Etsy at first, everybody realized that they could get in on it, was a very solid platform, a bit of an accumulation phase in the past from when they IPO'd till about 2028. Went up and shot up higher, especially during 2020, during the shutdowns, went up higher. We see this market cycle. It's pretty obvious, guys, right? Came back down, despair, suckers rally, came down, it's further down over here. Now, one thing I want to point out, so we're going to take this stuff off the screen so that we can see the volume a little bit more. See how the blue is an average amount of volume calculated over the past, let me see, past 5, and so every 5 weeks it averages out. We are seeing quite a bit of volume that we haven't seen since the lows over here. Okay, so volume is starting to come back in for Etsy. If we are able to break up above that $64 range, we definitely could see back up towards 70 pretty quickly. So Etsy might be something worth taking a look at. Let's real quick peek over at their earnings. Yeah, that's probably why. If you take a look at their quarterly revenue and margin, dropped to -8% last quarter. Annually as well, sits around 10%. But if they're able to show a beat here, let's see, their estimate Wednesday before open, estimate 48 cents revenue.
I did a write-up for them last night.
Let's take a look at that.
So, as Eric mentioned, we were looking at EPS at about, or were you talking about past numbers, or were those the current ones?
Past numbers and current. So
okay, so then basically the key focus for them is seller services, active buyer growth, and take rates. And this is for Etsy. The top line is stagnant, but margins might be improving. If Etsy can show strengthened seller monetization, it could be a game changer for them. They've been in rebuild mode after several quarters, buyer churn and weak GMS growth. Q1 disappointed, EPS missed, buyers declined again, but there's a new strategy brewing. Cut the bots. Third-party APIs are now blocked. Boost services. Etsy Plus updates. Survey hints at all-in-one seller tools as well. And then back to roots. Handmade first, less dropship bloating. CEO Josh Silverman is hinting big things are coming. We see opportunities where others see slowdown. Now, what are investors watching? Again, seller services. That is their main monetization engine right now. It's not new users. It's squeezing more out of their current seller base. If service revenue jumps again, expect bulls to pounce on that. Their buyer base is still soft right now. The consensus MAUs, monthly active users, is 91.6 million, with consensus premium sellers at 8.7 million. Buyer attrition has plagued Etsy for over a year. Any sign of stabilization equals major sentiment swing. And then finally, margins and costs. EPS is rising despite flat sales, thanks to headcount cuts and platform streamlining. But can it last? Look for updates on take rate trend, ad spend efficiency, and fulfillment cost control, most importantly. Now, why does this matter to the market? High multiple, low moat. Etsy trades at, are you getting a 44x for earnings on Etsy, Eric? Or what are they trading at? Or what's their PE?
PE right now says 45.45. So that
okay,
is fairly high.
I got like 44.8 for some reason. And by the way, we're in a tough macro climate right now. So keep in mind, this is a very user-based, driven platform. Platform power play. Etsy wants to become Shopify for creatives, basically. AI tailwinds, more personalization, smarter ad spend, and regulatory risk. Content, IP, and counterfeit scrutiny is constantly growing with this brand. Now, what could unravel this? Q1 miss is still fresh in investors' memories. Revenue comes in flat, shows that there was no real top-line momentum. Buyer growth is stalling out, and CEO and insiders have sold 300,000 shares just in this quarter alone.
Okay, I like that. So, terms of charts, I mean, okay, first off, if you have been on Etsy, the platform, especially throughout the shutdowns, COVID, all that, what you started to see was, like Max said, a lot of bots that were setting up situations where you're basically just buying straight off of Alibaba. It wasn't actually people. There was a lot of drop shipping that was being done through it, just like, getting stuff, instead of it being people creating stuff at home or, specialized products and things that you couldn't get elsewhere. It was really just another platform that people were selling selling AliExpress and DHgate stuff through. If that's starting to change and they're actually able to get those off of there, you know, I would definitely say that it is becoming the platform, going back to the platform that it's really meant to be. In terms of the chart, one thing I will point out, if you guys are familiar with this pattern, you do have a bit of this inverse head and shoulders pattern, which if it does play out through this, the measurement that you usually go for is from the head to the neckline is an expected move, and that's usually what you are aiming for. So here, if this really is a inverse head and shoulders, it's aiming for almost $90 from where it's at. But again, it has started to bottom out. I will say that if we, you know, it doesn't have enough for me to tell you if it's really a Wyckoff accumulation zone or not, but you know, for something like this, you would probably want to be buying near the bottom than near the top. The one thing I don't love about it is that PE ratio, and because of how the most recent quarter ended up being a negative net margin, those are just situations where, you know, if they are making this pivot and they're able to give good guidance for the future, we could definitely see a pop from here. And another thing is that Stacks is hinting at that potentially coming, especially with these unusual calls that came in, and then this short-term calls that came in just today near the close. So definitely something to keep an eye out for. We will review this when we see the reported earnings, not tomorrow, on Wednesday before open. So we'll take a look at that together, guys. All right. What else? So we're looking at Wednesday before open. Let me share this with you. Earnings Wednesday before open. We got VRT, MO, which is Altria, TEVA, Kraft Heinz, maybe Humana. We just did Etsy, Hershey's, and then obviously I think the ones that you guys would probably hear for: Meta, Microsoft, Robinhood, Applied Blockchain, Carvana, Lam Research, Qualcomm, Ford, and ARM. So yeah, Wednesday after close is going to be a big one. Thursday we got CVS, Roblox, ABBV, Norwegian Cruise Lines, CCJ, Kamiko, Cigna, MasterCard, and then after close we got on Thursday Apple, Amazon, MicroStrategy or Strategy 8, Coinbase, Reddit. And then Friday before open, ExxonMobil, Chevron. I think those are the big names that we're looking at. So yeah, we got a lot to go over. Let's peek over at Wednesday before open, VRT. Saw some puts being purchased, some calls being sold. Oh, they don't think it's going down below 142, and it's at 142.5 right now. Puts being bought. Or sorry, sold calls, so they see it going down below 142. That's right, my bad on that. Buying of some puts. We do see some big money for above 142 as well. Now, I was peeking at the chart earlier today. We had somebody ask about this in our Discord. VRT is kind of making a decent run up right now, right before earnings. We are seeing it pretty much aiming to fill this gap that was made back in January of 2025, so earlier this year. It's actually a very big gap when you consider it. But it's almost filled to the top. So I would expect at 145, it probably will bounce, sell off a little bit before it makes a decision as to what direction it might want to go. From the lows back in April during the tariffs, this is already up 165% since there. And that's basically when their last earnings were. PE ratio at 79, that's pretty high. Net margin at 8% last quarter, on an annual basis about 6.19% annually. Analysts and technicals say it's a strong buy. You got anything to say about this, Max? VRT?
No, I didn't really look into them because they just historically, I saw some stuff come in for them today, where I would say it looks more bearish, if in my opinion, from just the flow that we saw. But again, yeah, I didn't. That is not one that was on my big list of things to look into today.
Yeah.
I've had a lot. I've had a lot of other reports I've been trying to get through to get ready for Wednesday, basically.
Yeah, I agree. VRT, just because it's run up so much, I definitely think that there is at least a little bit of a pullback coming. If they are able to show an extreme beat, then yeah, we could see a pop. But they, let's see, historically small beats. Yeah, even this one where they had a 20% EPS beat, they dropped afterwards. So remember, we've always warned you guys, just because it shows a beat does not, yeah. Shoot, when it shows a solid earnings beat, it actually has tended to pull back a little bit. Yes, it's gone higher over time. Giant V-shaped recovery so far, but I would say we might see a right shoulder form, maybe come back down toward 120, 125 maybe. I think would be a good range where people probably would want to look for some buying again for the long term. Next on the list, MO, Altria. I believe this is the company that, yeah, tobacco, Marlboro and things like that. They pay a decent dividend, which is why people purchase into it, 6.82%. On the big picture, it is breaking out from a downward trend line. We did see, tariffs on it popped down and then bounced right back up pretty quick. PE ratio out of 10, pretty solid for a company like this, especially with them and their dividend yield. We are at let me draw this out real quick. I think it's just consolidating, and we're seeing a bit of this wedge pattern play out. So if it's able to, it might reject, come back down to the lower end of it, continue to bounce out around until it's able to break either top or bottom. It's probably just stuck inside that range. Let's take a look at what we see with stacks. Stacks, this last week we saw, these might be a earnings play. Let's see, is it trading above 60? No, it bounced back down a little bit. This person sees it above $60 by the end of the week. So that might be only $50,000, so nothing huge. Keep in mind, some of these are, comparatively to the rest of this week, if you're the institutions and you don't have a clear direction on some of these, you'll probably stay away from these names, especially with names like Meta, Microsoft, and Apple, Amazon reporting this week. Probably not going to see as much going on with these names that are, they're still huge companies, but they're very small comparatively to our Mag 7 and the bigger companies that are reporting. TEVA, I like TEVA just because I've made some decent money off of it, but nothing really going on stacks for it right now. Let's peek over at the chart though. Kind of just forming this flag over here. A little bit of a fallen wedge. I definitely think once we see it break up above, we'll probably see it retest that $17. Maybe come back down and then head back up from there. But that's going to take some time for it. TEVA, let me give you a bigger picture look on it. What does that look like, you guys? In that blue box down below. Wyckoff accumulation. So bounced off right up on the top range of it. I think in due time we will see it back up above 22. Might be a decent buying time for this kind of company. They are a generic pharmaceutical company, so down the line, I feel like we haven't really heard too much about tariffs, but I think this company is, I believe it was stationed in Israel, or the headquarters are in Israel. So, oh, that's why their net margin's been negative recently. Last quarter was one of the first positive net margins. If they're able to continue reporting positive growth there, we might see it pop back up. So that's coming in on Tuesday or Wednesday before the open. Keep an eye out on that. Stacks doesn't give us a clear direction, so I'd probably stay away from it, but we'll take a look at it after the reports have happened. Let's real quick turn our attention over. Let's look at waste management. What happened today? We're supposed to report. Tiny little pop so far. Nothing major. Up like $1. Nothing so far. Tilray. Nothing so far. Tilray's up a tiny little bit. Had a pop higher to 72 cents. Back at about 70 cents so far. So nothing major so far.
So it looks like Waste Management bought somebody. They spent $7.2 billion to acquire Stericycle, and that's expected to add about $125 million in annual cost savings, and enhance its medical waste services as well, with Waste Management.
Okay.
But in terms of their actual numbers that have come out, nothing's hit yet, which is weird because it's 20 minutes after open.
Yeah.
Or it's 20 minutes after close at this point.
We'll come back to that in a minute. If you guys notice any movements, let us know. KHC Kraft Heinz. Let's see. Nothing major. Short term, maybe a few more bullish prints. Big money thinks it's going down. But this one's wrong. This one, they spent 1.23 mil on it last month. It's moved in the other direction since. Nothing big, nothing huge in terms of it. Let's look at the chart. Kraft Heinz PE ratio at a 13. That's pretty solid. Annual net margin strong at about 10%. Quarterly at about 11. Had a bit of a run up. Still making higher lows. But it's kind of just, I would say it's in this bit of a channel. It bounced off those lows. We are seeing some volume come in for that, so might not be terrible in terms of the long run. This is one of those companies where, they started off with just Kraft. You got your ketchup and your condiments and stuff, but they've got a lot of different foods that are sold at the supermarket. 5% dividend yield, solid. So I don't think it will be trading at these lower valuations for too long. I do think it will head back up over time. Earnings, you can see, pretty strong and pretty solid throughout. So it's probably expected for them to be earnings at this point. But a little bit of a sell-off before earnings, so I think we might see it bounce off this lower end and head back up. Humana, HUM. Health insurance, our favorite. A bit of a distribution pattern already happened. Are we down where it's starting to get accumulated? That's a good question. It's really just in this range right now. This could be a situation where we're seeing these wicks down below tell me that it does not want to go down below that 218 level. It's getting snatched up down there. So Wednesday before open, PE at a 16. Could we see it high? It's got to break up above this 252 for it to really have some room to head back up. 252 back up to 262, which is the point of control. Let's look at stacks. Do we see anything worth talking about? Not much. A little bit of some calls, some puts. This short-term one thinks it's going to head up above 330 by next, what, two weeks from now? Almost 3 weeks from now. That's an interesting one. They also got these puts down below 220. These ones have made a little bit of money since, but hard to tell on this one. Definitely hard to tell. All right. Let's review. I know you wrote these. You wrote up what? Meta, Microsoft. What else did you get written up so far?
So today, let's go back to pinned that. So we got Carvana, Robinhood, Microsoft, and Meta.
All right.
And then, yeah, Starbucks we already did, Spotify we already did. And then the rest of these I'm probably going to get done tonight, being real. Realistically, I'll have the rest of our big guys out tonight, early tomorrow morning. So you guys are prepped and ready to know what to look for in that as well.
Cool.
So wherever you want to start, I got those. Oh, I have those 4 ready to go.
Let's do Meta real quick since I have it pulled up here. Let's start off with your take on Meta. Let's go.
Okay, cool. So expectations going in here, revenues coming in at 44.8 billion, which is up 15% year over year. EPS is expected at $5.83, which is up 13% year over year. Already off to a great start, by the way. What did we say? We like to see above 10% for year over year figures when it comes to revenue and EPS, because that typically means their forward guidance will be a little more confident. Now, why this quarter matters more than most. Oh, wait, before we get to that, CapEx is expected between 64 billion to 72 billion for the full year guidance, and Reality Labs is still losing 4.9 billion this quarter, by the way. So that's just one thing to keep in mind about Meta is ad revenue and Reality Labs are kind of like their big Achilles heels, if you want to call them that. So the reason this quarter is going to matter more, AI CapEx. The spending scrutiny is getting real and it's becoming a lot more pressure. Their AI infrastructure investments like Project Hyperion and Prometheus are running tens of billions a year. Wall Street wants the upside of leading AI, but it's starting to ask these questions. Where's the payback window? Are margins getting squeezed? And is Meta forced to outspend rivals just to keep up? Now, the talent wars are also here. Brain drain or strategic bet. Zuckerberg has been offering 200 million plus comp packages to steal AI leaders from Apple and OpenAI. Great PR, but raises red flags about rising OPEX and retention risk. Mind you, he just poached, I think, 2 of Apple's AI engineers. So it looks like it worked. We also have Threads, WhatsApp, and monetization surfaces. Meta's still trying to show that platforms like Threads, 350 million plus monthly active users, by the way, and WhatsApp can be monetized at Facebook / Instagram levels. Investors want revenue per user's progress, evidence of ad traction on new platforms, and updates on how AI tools, think Advantage Plus and Llama, are improving ROI for advertisers. Now, the final thing here is regulations. This is a creeping cloud that Meta has always had to face. The $8 billion Facebook privacy suit is settled, but DMA compliance in the EU and US antitrust probes are still in motion with these guys. Investors will be parsing expense guidance for legal / regulatory costs that could eat into the margins in the second half of this year. Now, what to watch in Q2 from our call? AI spending efficiency. Can Meta justify its 70 billion plus capex with near-term utility and user impact? The ad revenue engine. Are Advantage Plus AI tools driving higher spend per advertiser? And is engagement still up year over year? And then Reality Labs drag, still bleeding billions. Any shift toward break even or just another money pit? And then margins, FCF, and buybacks. With 13 billion in Q1 buybacks and 70 billion in cash, investors want to see capital returns continue even as costs currently rise. Now, why does this matter to the market? Meta is now the AI capex bellwether. If Meta shows it can grow earnings while spending big on AI, others will follow suit. A miss or weak guidance could ripple across Google, Microsoft, Nvidia, and the overall AI ecosystem. Now, their biggest risks heading into this, margins are getting hit by talent costs and compute shortages. AI results, these are long-term. Investors want short-term ROI. Reality Labs is still dragging down earnings quarter over quarter, and they have legal headaches, which are hard to model costs because people won't know, well, how much of their capex are they going to have to use in legal and regulatory fees at this point? So that's one of the big concerns about them as well. So will capex get revised up again to 75 billion plus? Is Meta trimming OPEX to offset? And how are WhatsApp plus Threads monetizing? And finally, are supply chain issues limiting their actual AI deployment as well with Reality Labs? So is this overbuilt, or are they going to be over delivering? Because those are kind of the two situations they have now put themselves in.
Great analysis. I like that. Now let's take a look over. Let's start off with stacks. What does stacks show us right now? So first off, search for Meta. Dark pools. I want to point out on the 18th, we had a big flood of purchases, but then 18th, the two golden ones that you see over here, 424 million, 435 million came in on that day. On the 16th, 400 mil as well. So definitely a lot of money flowing into it. Let's go over and check out what the purchases, oh, there we go, the buys. And then especially because this is one of our biggest companies that we have, I'm just going to filter for big money real quick. Big money shows, and these are anything where they're spending over $1 million. We do have some of these shorter term ones where aiming for the first, they are aiming for over 700. And you can see it's kind of relaxed back down since that. It's I'll show you guys on the chart a little bit. It's kind of forming a bull flag from what I can see. Zuckerberg, he's been doing a pretty good job in making sure that, you know, this company reports well, and you know, they've got good leadership. The one put that we see here aiming for this Friday as well as saying it's going to be under 700. So that's just something to consider. In terms of the unusual prints too, not too much in this last month. We have one on the 14th and one on the 9th, and then everything else is from earlier in the year, so keep that in mind. But these ones aiming for December, you know, aiming for some pretty ridiculous strikes. Over 1,000, over 890. This one's aiming for $1,430 for Meta to be valued at. That's almost over 100% from where we're at right now. So something to consider. The chart itself, we gotta always start off, pull out to the big view. we are near all-time highs. We saw a big drop down in terms of the tariffs and all of that news, and we've basically see it run back up 50-something% from that low. Right now, I would say we are in this bit of a bull flag pattern. We are at the top of that, so there's potential for us to break out. If we do see it break out, I would not be surprised to see it come back toward all-time highs before it decides if it's going to want to go up higher or just kind of chop around up in that range. The point of control over here as well is at that 400 or that 700, right around 700. So if it breaks down below 700, I would definitely say we could see 678 pretty quickly on that range. So let me mark those off for you guys real quick. Of course, if we're able to break up above that. So Meta on earnings, if we take a look at previous earnings as well, positive earnings popped up here, positive earnings popped up, positive earnings dropped, positive earnings popped up and then dropped, positive earnings drop, positive earnings pop. So you got to understand, it is one of those ones where it does not move directly correlated to what the earnings has to say. This is going to be related to that forward guidance. PE ratio out of 27, and then our revenue is pretty solid. Their net margins in that 30 to 40% range. Annually, it's only gone up over the course of the last few years too. So strong company, definitely one of the leaders in the AI space. But I will have to say, considering, at least for me personally, I'm using ChatGPT, sometimes Gemini from Google. I'm not necessarily using Meta's AI that much. So, give me comment for me. What is it that you guys do? I did use Meta's image generation for a little bit just to play around with it for fun. But in terms of, am I using them to help me solve problems and to help me create content and things like that? Not necessarily as much. Definitely more so using the LLMs from, ChatGPT, and probably using, Google a little bit more from that. So we'll see how they end up faring in the long term. But as of right now, with what Stacks has to say, probably a little bit more bullish than bearish on this. We will come and revisit this again on Wednesday, just because Wednesday after close is when they report, and we're probably going to have to take a look as to what direction that goes. All right, next, Microsoft,
here we are. All right, so Microsoft. So far, we're up 21% year to date. AI CapEx is soaring to 80 billion for them. And Azure's eating cloud market share like a buffet, which are all great signs for this company. So going over quickly, estimated revenue, we're looking at 73.8 billion, up 14% year over year. EPS, we're looking at 338, which is up 14.5% year over year. The key focuses here are going to be cloud growth, AI monetization, and the FY26 CapEx look. Wall Street is as bullish as it can get. 100% of visible alpha analysts rate Microsoft as a buy right now. Citi, Wedbush, and Jefferies all raised price targets to $600 plus, and traders are betting on AI plus cloud, giving them huge margins of growth. Now, what are we going to be watching for this quarter? First things first, intelligent cloud, which is their growth engine. Azure is projected 34 to 35% year over year growth, constant currency. Segment revenue is looking at 28.9 billion, up 22%. And Microsoft continues to gain enterprise share. Azure's Copilot AI integrations are getting traction and helping push margins higher. We're also seeing a productivity powerhouse. Office 365 plus LinkedIn was a $32.1 billion segment in revenue this quarter. 12% year over year. Copilot adoption, it's boosting right now, and steady LinkedIn engagement despite macro hiring headwinds for it. Now, the question here is, are businesses upgrading to premium tiers, or are they sticking to that base tier still? Because again, that's going to be more revenue in their pocket. Personal computing resilience. Surface, Windows, and Xbox, 12.4 billion in revenue, only a 1% year-over-year gain, which is a little concerning. Xbox and Minecraft saw users surge thanks to blockbuster gaming releases. PC shipments are globally rising again, 6.5% year-over-year. Watch for Windows upside surprise here potentially. The AI capex, is this fuel or fire hazard? Microsoft is in a AI spending arms race, as we just saw with Meta looking at expectations of raising their capex to 75 billion from the current 70 billion. Microsoft's full year 2025 capex is at 80 billion currently. For full year 2026, the capex outlook, slower growth, but it's still going to be massive. So that's just something we're going to have to wait to hear on the call. And then the data center expansion, multi-gigawatt builds across the US. Think Project Prometheus. But here's the risk. Alphabet just raised 2025 capex to 85 billion. Meta, as we mentioned, is probably going to go harder. Are investors going to start worrying about those returns? Because that's what everybody's going to be questioning. Now, why does this matter to the market? Well, AI monetization for one. Microsoft is winning early with enterprise Copilot integrations that other companies just have not been able to achieve. As Eric mentioned, he doesn't use the Meta AI. He uses ChatGPT. I'm the same. I don't think I've ever used Meta AI. And quite frankly, I don't think Meta is expecting people to use Meta AI other than to help them write better ad copy, get better engagement, which will in turn drive them to spend more money, because at the end of the day, the ads game is a pay to play game, baby. You got to pay if you want to play. Now, cloud dominance. Azure is still second only to AWS, but it's gaining ground fast. And then the valuation, is it justified? Microsoft trades at a 12 times forward sales multiple. Can earnings support those premiums? Now, our big risks with Microsoft we're looking at: AI capex bloat. Can margins hold? Windows drag. PC demand is still volatile here. Gaming softness. If Xbox engagement slips post, think Minecraft hype is starting to fade. And regulatory overhangs in Europe and US around cloud, search, and LinkedIn. So really what's going to make or break this rally for Microsoft is their full year guidance of 2026. Key things to watch on that call. Again, updated CapEx plans, Azure client pipeline plus margins, Copilot usage metrics, gaming, LinkedIn, and enterprise seat growth as well. So they have one of the more bolder bets in the market right now, but also they kind of have the stuff to back it up. But that full year guidance will be the thing that could completely blow the wheels off of this rally, because with these bigger companies, if their guidance doesn't come through, as we've seen with even smaller companies, if it's not where people are expecting, think of that 10x for someone like Microsoft or Meta. The reaction is going to be 10 times worse than what you would see with a normal company. But the other flip side of that coin is you will see recoveries at a much quicker rate. And that's where you can look at volume shelves and where the bottom whale targets are and where are people selling big money prints of puts, because that's what's going to tell you where they really think support is going to gain if this thing does fall off of a cliff at any point.
Very good. I wanted to make sure you guys see this in terms of, first off, if I'm just looking at the chart, we've got a little bit of bearish divergence. We just keep seeing it head up in this little channel that we have up here. So I want you guys to notice, since it popped from last earnings, right? From April, we saw it pop up from there. Then we've just been in this upward channel this entire way, okay? There is a bit of bearish divergence when it comes down to my stochastic versus heading up higher there. But, and well, another thing is it's also near at all-time highs. So that's something to consider. Now, does it mean it can't go higher? No, it definitely still can. And especially with how strong it is, I still do think we could potentially see it further up, but that would definitely be a more long-term play for here. In terms of earnings too, look at all those green E's at the bottom. The only last time they missed was 2022 in July, okay? So all green E's all the way up through there. So is it priced in? I would definitely say that it's very likely a lot of this stuff that we just talked about has already been priced in. Now, the one thing, and I like to use this as our indicator, what's going on stacks? Well, starting off, there are a lot of calls being sold, but if I go and I filter for just the buys, most recent sentiment, especially where all the big money is, 8 mil right here, 1.3 mil, 1.25 mil, these are all calls being purchased. October, August, and December. Now, if I was looking at an earnings play, so looking at what is being purchased, $5 for the December ones, 600 strike, that's still pretty far away. The August, this short-term one is one that really makes me say, okay, they definitely think it's headed up, because this only has about 2 weeks, a little over 2 weeks, almost 3 weeks to go before this one would expire. 530, okay? And then our unusual but also big money is aiming for December, the 560 calls, 1.66 mil, and it is up a little bit from there, but definitely they probably expect it to continue higher. Now, take a look over on the right side. The big money, they've spent well over $1 billion. Oh, here's exactly $1 billion that was spent on the 18th. But add up all these numbers on the right, that's probably almost $3 billion being spent on Microsoft over the course of the last 2 weeks. So, dark pool, big money sentiment, I would definitely say is more bullish than bearish here.
Well, I was going to say one thing you also can look at is for dark pools. I've been doing a little bit of like digging in the background. Is a lot of times when we see sell-offs, if you look at previous dark pool prints, those are areas where we'll see it typically rebound, because that's where, one, people deployed a lot of cash, so they will potentially deploy more down at those levels. And then on top of that, those can be used as like kind of your bottom out zones for stocks that are flying a little higher or are maybe moving a little more aggressively. So things like Microsoft, SPY, any kind of big type of names, you can always use the dark pools as kind of extra sentiment in a sense for if you're unsure. Because if you're unsure about the options play, if someone just dropped 583 million on shares, then I'm sure your options play, if it's far out enough, should be pretty safe.
Yeah, I'd say Microsoft definitely leaning more bullish. At least I would expect earnings to be a beat. Hopefully, I would say price continues to go up because of their future guidance. They seem like a very strong name at this point. I'm not loving how it's only gone up since, like I said, I want to be bullish on this. I think it's probably bouncing off this lower end of this, and we're going to see it make new all-time highs. So it could be above that 520 range pretty quick. But as we all know, just because it reports a double beat, does not always mean if they are, but the things that you have going for something like this, you can expect that everybody that's working in this company, all the CEO and everybody who are going to be on that earnings call are going to do their best to try to make sure they push this name up higher. So you do have a lot of forces aiming to push it higher. I would definitely say after earnings, or at least by, you know, that Wednesday after hours, I see it retesting this high, this 518. A lot of the stacks prints say it's aiming for over 520, and 530 is kind of what it's talking about. So might be a decent earnings play to take a look at, though. All right. Carvana. Let's talk about that one.
This one's interesting. So for Carvana, we're looking at Q2 EPS estimate at $1.10, which is 686% year-over-year growth.
Did you post this one?
Yeah, it should be posted.
Do not see it right now. I'm scrolling back to yesterday or last week.
Oh, I might have not posted this yet. Here, I'll post it right now. Because I have it done. Oh, I got sidetracked. Whoops.
That's
all right. Let's go into here real quick. And
while he's doing that, guys, if you guys can, go ahead and comment for us so we know you're still here. We're not shouting out into the void. Comment stacks. Let us know if you're going to take in on those Meta or Microsoft positions. Are you looking for up or downside there? There we go.
Okay, cool. There it is. So 686% EPS growth. Revenue, we're looking at 4.56 billion, which is up 34%. Little more moderate. 2025 EPS estimate, though, is $5.04, which is up 217% year over year. The price target from Oppenheimer that they just dropped, by the way, is $450 a share. Year-to-date performance up 100% since its April lows. And why are the bulls gunning this right now? Well, one, the retail sales units are soaring. Carvana isn't just selling cars, it's selling a lot of them. In Q1, retail sales units jumped 46% year over year, cracking 100K for the fourth quarter in a row. Q2 is expected to follow suit with 135,750 cars sold, a 33.8% surge year over year. Now, why the boom? Blame or thank tariffs and interest rates. With new car prices hitting records, shoppers are flocking to used options. Now, number two, margins are going turbo. This isn't the same Carvana that burned billions during the pandemic thanks to smarter inventory, leaner staffing, and way less ad spend. Margins are on the move. It's ad spending got cut. Reconditioning is streamlined and logistics boosted by the ADESA acquisition. This is the magic of scale in tech. Carvana's EBITDA margins now lead public auto dealers at 11.5%. And then Wall Street's also falling back in love. Oppenheimer just went from meh to moon, upgrading the stock to outperform and slapping a $450 price target, which is 30% upside. BTIG raised theirs to $395, and JP Morgan even got in on the fun and just hiked to $350. Now, why? Traffic is up 7% with margins expanding, and Carvana is finally executing at scale, which was always one of their big problems. Even traditionally skeptical firms are warming up. The stock's average target now sits around $370 a share. But where there are bulls, there are bears lying in the wake, just waiting to cut their legs from under them. Now, number one, it's pricey AF. Carvana trades at a PE of 116x, typically, which is insane. That's nosebleed territory. Compare that to CarMax or Sonic Automotive, and you see why some folks are calling it overheated. Is it justified if they keep smashing earnings like this? But one misstep like a soft quarter or disappointing guidance could send this thing back under $300 fast. Now, that debt load also is not light, my friends. Carvana still has a 2.97 debt to equity ratio. And while they've made progress cleaning up their books, they're not out of the woods. Higher reconditioning costs, thanks tariffs, could pressure profits. If interest rates stay sticky, it makes that mountain of debt a bigger problem. And then also, the big thing, and this is why I said it's interesting, insiders are cashing out. Insiders have unloaded 700 million plus in shares this quarter. We're not saying they don't believe in the long-term story, but they sure aren't hodling. That kind of selling pressure raises questions. Do they see a ceiling here that we aren't aware of yet? Now, our take on this is Carvana is crushing expectations. It's scaling smart. It's getting leaner, faster, and more efficient. And Wall Street is starting to take notice, which is the first sign of good things to come. But we're also not blind to the risks here. Valuation is steep. The balance sheet still has red flags. And if used car demand fades, margins could get absolutely crushed. If Q2 beats again and guidance goes higher, Carvana could rip to 400 plus in a flash. But if they stumble, buckle up, because this could be one of those 15% overnight losers that we see, like a Lululemon type of situation. So it's not, think about it like this. Carvana has now moved away from being we sell used cars to now we're an e-commerce platform that happens to sell cars. And that's kind of how they're trying to position themselves moving forward. So they have a wider user adoption and they can keep pushing those units out. But again, we do still have those risks with it. And it is an expensive stock to get into with a very high risk and very low price targets that could crush you and your portfolio.
Yeah. Something interesting I want to point out. Let's start off with the chart here. So I've shown you guys this picture of Carvana from before where we've got this huge, we've got accumulation, distribution, redistribution, accumulation down below, and two portions where we had reaccumulation headed back up. The big question we want to ask here is, are we really expecting this to be another distribution, or are we going to head up higher before we distribute? The thing that you want to keep in mind for something like this is looking to see if we've created and can see some sort of actual buying climax. So we're going to look back here. This technically was the beginning of the buying climax where you see these huge spikes of volume down below. Making sure you see that. There we go. Huge spikes of volume. And then, yes, in this situation, it did head up higher and things like that before it redistributed. But we do not necessarily see that type of behavior just yet with where we are. So I do think that we very likely could see a bit higher for Carvana in due time. But the earnings report, I think, is it's a risky bet right now. And I'm going to give you my reason why. First, let's take a peek over here on the right side where you can see the past 4 or 5 earnings that we have here. And take a quick look as to the percentage surprise. So in Q2 of 2024, they had a 946% surprise, okay? So if we take a look back over on the chart here, Q2, let's go further back, okay? That's where we see these big pops, okay? So here we saw a big pop because of something like that with earnings. Then we saw 111%, which in this situation popped and then came back down over the course of the next few days and went up higher later. Then we see 140%, right? So pop again. Then we see this one right here where it had a great earnings, but then it dropped below. So what I want to point out here is more so the fact that the expectations are definitely there for Carvana. And you want to understand the expectations as a whole. People are thinking, hey, they're reporting such good numbers. They're doing well. This estimate is probably on the low end. We are expecting a percentage beat. Question is, what is that expectation? And with the most recent ones, yeah, it's very possible people are expecting a very large beat already, and that may be already priced into this situation. I will point out that the pattern on the chart shows a bit more of a bull flag pattern, but it is a situation where I can see this being one of those double beats where we see it sell off. We'll probably see a spike overnight, see it retest some of these highs even, and then we'll see it sell off throughout the day because a lot of it's been priced into its earnings already. Income statement on the annual side of things, it just in the last 2 years started to make money. Quarterly is doing fairly well in terms of it, but still only a 5% net margin. Now here's where the interesting thing that Max mentioned was on their balance sheet, total liabilities to their assets is finally down to about 80%, but it's still fairly high, okay? 83%. So they got it down below 100%, but again, total liabilities is still very, very high compared to what assets that they do have. A thing that we've talked about too with Carvana, if you happen to live close to one of their, car vending machines, I'd figure, don't whip out your camera every single time, but if you got one of those dash cams, compare your dash cams over time to see what is actually going on with that vending machine. It's actually a visual to see, are they swapping out inventory? Is it constantly new cars? Do you see stuff sitting in there for a long period of time? And in doing so, you can get a gauge as to see, are they doing well? Are they rotating out that inventory and consistently getting new inventory, selling off those cars that are in that vending machine? So it's actually a way, most companies, you're not going to be able to go into that back room and see what inventory is, being pushed out and what's still sitting on the shelves. Carvana's got it kind of just displayed out in the open for you guys. So it is a way for you to get, an idea, a little bit of sentiment in terms of what's going on there. I do remember back during COVID and during, a period of time when a lot of those, a lot of inventory started getting extremely expensive, noticing what was going on that vending machine was really being reflected upon earnings. So it's just kind of a way for you guys to gauge that sentiment. Let's take a peek over. Oh, by the way, on the daily, and here's what I would say is we do have 2 more days until they are after hours on Wednesday. So we still got tomorrow and the day of Wednesday. I would definitely say we could see this just run up right before earnings, probably test out this 344 and probably back up toward 350 or so. And then the earnings reaction will happen after that. So you might have a chance to play a little bit of the upside in these next 2 days. A little bit of a scalp or day trade on this name. Let's take a look over at stacks. Let's reset everything. Carvana. Lots of unusualness coming out today. We got some calls being purchased for the 400 strike for September. We also have a short-term one in terms of August, 15th, 420 strike. That would definitely be a little bit more of an earnings gamble that is a little bit cheaper for some of you to get into. But we also have these being sold off too. So they do not, I'll be honest, this is actually a pretty good position. Do you see, and I'll ask Max too, with PE being this high right now, selling off the 420 calls for 815, I think that's a solid play right there, right? If you're able to sell off that, you're going to be pocketing that $234, $42 right there. I do not see Carvana breaking 420 in the next 2 weeks.
No,
I mean,
not at all.
That's kind of ridiculous. So
there's a better chance it goes below 300 in the next 2 weeks than it does go above. Because again, this is one of those, because EPS is like 600% expected year over year already. To your point, Eric, a lot of this might already be priced in. Yeah. So when we get to the actual call, we could see a sell-off, but that might be what the big guys want, because then they can buy more for cheaper at that point. Agreed. And they don't have to wait longer for a drawback. So there's more benefit, honestly, for them to tank earnings. There's more benefit for their long-term upside, because them tanking now attracts more investors for later. Because what was the first thing we said in their risks? This is expensive AF. Like, they're isolating a lot of people from getting into the stock right now with their price target and with how volatile it's moving. and with how horribly it's trading forward. If we're being honest, I don't want to get into something that has a 100x PE. Like that's insane. So, and I don't think most big funds don't want to do that either unless they're playing both sides of the coin at that point. So I think this is definitely one of those situations where if that 420 thing plays out, hey, more power to them, but also like that is a lofty bet for 2 weeks out with a company that is this volatile. You gotta have some cojones on you.
Yeah, I agree. If you had that, if you had the bankroll to to do that, sell those calls for 234, very likely would end up pocketing that over the course of the next few weeks. Especially with IV being this high, it's at 72. Obviously, not as high as some of the other names we've seen. But yeah, Carvana expected to beat, but I would say with the beat, I would more likely than not see a sell off versus a huge pump up higher. Of course, I could be completely wrong, but in terms of where the numbers stand right now, with the P ratio that high, with their liabilities still being so high, unless they come out of out of left field with some sort of new announcement of sorts, it's not breaking 420. That's what I'll say. It's not breaking 420 in the next 2 to 3 weeks. Could it break above 350? I think so. It's possible. We might see a small $10 to $15 move after earnings, but definitely not going to see it go up about $80 from where we're at right now. Okay. Yeah. What else? We got Robinhood, Lam Research, Qualcomm, ARM, even Ford. Man, we got so many names coming up.
I know, that's why I'm like, I gotta get the rest of these out tonight, probably. And then tomorrow I think we'll have our longer stream where which I think it'll be a little more beneficial too, especially with Apple and stuff, because then we'll have 2 days of data to look back on. We got some bigger names reporting tomorrow, so maybe some more money gets injected to the market. I mean, we only had 59.9 million in total overall volume for SPY today, so if that gives you any indication as to how slow today was, that will right there, because typically we're seeing SPY touch 100 million, 80 million in total overall premiums on the day for Flow Scanner, and today the Flow Scanner was pretty light, if I'm being honest. So it's really, these people are going to be waiting on big tech names to report, these smaller guys to report out, and then we should probably start to see some more solid movement tomorrow, mid-session, into a little more aggressive hedging and position taking going into close as well.
Yeah, I agree. I'll just pull up some quick flow just to see if there's anything that came in today, but a lot of these names, like we said, we'll get a better gauge of it in the next 2 days, especially for these Wednesday and Thursday names. But let's go real quick. Robinhood, very popular name. Today saw a little bit of flow, some sell of some calls. Ooh, that's interesting. But we don't look at that. Aiming for above 155 by 2026, above 110 by September. Those are some pretty pricey contracts, if I will. 60-something% IV, not terrible. Some purchasing in terms of Robinhood as the equity. Oh, we saw a little bit come in after close. That's something to keep an eye out for. Lam Research, LRCX. Some calls being bought. This could be a little bit of an earnings play. 81 cents per share for those contracts. Not bad. Qualcomm. Calls being sold, unusual. They don't think it's going to be above 200 in October. No equity being bought right now, though. We do have some big equity prints from earlier in the month. It's still right around that range too. ARM. I just noticed the ARM office near my place over here. I was getting on the highway. It's right off the highway. It looks like they bought an office over here, or leased one. Calls. I want to actually peek over at this. So back when we first released stacks, you see this January of 2024, we saw all this come in. All this come in. Look at that. All aiming for ARM to be above 67, 70, 72. And this is early on in the stock. Millions and millions of dollars, okay? This was one of our, biggest hitters that we've seen. And it's definitely, ARM has gone up toward 130, 140, 150 almost. It's come back down. It's back toward the 96 to, oh, sorry. It came back down. Now it's back up toward that 150, 160. So a lot of these calls that came in, I'll tell you this, whenever you see long-term dated contracts all aiming for the same strikes, all in millions and millions of dollars, all of them getting in at the same time, don't ignore that, okay? We haven't seen something like this since we first started, but this was definitely something where if this situation came up again, I'm not betting the whole house, but again, I would definitely take a solid position in something like this.
Especially with ARM, they historically have a good. I have Robinhood done, by the way, if we want to go over that.
Yeah, why not? Let's get that done today.
Because we got Hood. That one's going to be interesting because people always forget they're based in Europe too, and that plays in that plays a factor because with them, it's really about, okay, here we go again. Are they getting ready for another run up, or are they getting ready to run everybody up to a cliff and let them run off? They're up 173% this year and heads into Wednesday's earnings with a ton of momentum so far.
Did you post it? I didn't see the post.
Is this another one I forgot to post?
Yeah,
maybe? Yeah, I did. Let me grab our Q2 earnings spotlight. If my computer would stop freezing every 2 seconds, that would be fantastic. I swear, my computer has been crashing like once a day. I think I need to upgrade the hard drive in this thing. Oh, here we go. That's why, because it gave me a weird format. There we go. All right. So, Robinhood. No, we're not talking about the movie, but we are talking about their earnings date. So, estimated revenues at $915.2 million, up 34.2% year over year. EPS, we are looking at 31 cents, up 47.6% year over year. The sentiment is bullish, but stretched. Now, what's moving the market exactly with them? Trading boom. Options, crypto, and equity trading volumes are absolutely exploding. Gold growth, premium subscriptions are surging now at 3.2 million plus members. Expansion mode, buying Bitstamp, launching credit cards, and, well, going global. Buybacks and flex. 1.5 billion repurchase plan in place, 4.4 billion cash on hand. That's a great margin to be carrying, by the way. But the valuation warning. I'm getting a 67x forward PE. That's rich even for growth lovers. Now, what are analysts watching? Transaction revenue. Options, we're looking at 252 million, 38.6% year over year gain. Crypto, we're looking at a 93.2% year over year gain. Equities, we're looking at a 70.2% year over year gain. And total transaction based, we're looking at a 55% year over year gain. Their interest income is still strong. Net interest income is looking at an 8% year over year gain, and the Fed hasn't cut rates. Robinhood still benefits from holding customer cash. And then the expense watch. Elevated spending from expansion, product launches, and M&A, Bitstamp, WonderFi. Legal bills are stacking, 70 million plus in fines / settlements since 2023. and eyes on how much they're spending to chase growth versus tightening their margins. Now, the bigger picture with them is going global. From the UK to Singapore to the EU, Robinhood is betting big on crypto plus wealth tech abroad. Wonderfy and Bitstamp give Hood new licenses, products, and users. There's also a fintech arms race that we discussed earlier with SOFI. Hood launched credit cards, a prediction market, 401k services, and more. It's not just a meme stock casino anymore. This is a full stack financial deal, and they're going up against Schwab, IBKR, and legacy banks currently. And then the regulatory risk is real. Florida and Lithuania probes are currently underway. There's a history of fines, 45 million in January, 26 million in March, 7.5 million in 2023, and more scrutiny equals higher compliance costs. Now, what could break the rally here? Profit margins are under pressure from spending sprees. Legal landmines could derail global expansion. The valuation is just super lofty. The competition is also heating up in crypto currently, banking and wealth and management, as we've seen with some of these others. So Robinhood's numbers are expected to be strong, but the stock has already run very hot. If management shows discipline, keeps monthly average users growing, and gives bullish guidance on crypto plus international, the stock could push to all-time highs again. But if spending runs wild or regulatory noise gets louder, well, we're going to have to look out for some downside below as well. So that's really what's going on with Hood. I like them personally, but I also like my analysis a little more because it seems to touch on a lot of the, I would say, big question marks that they're going to be facing here for this earnings report. I don't think it's a make or break type of earnings report for them, though, personally.
Yeah, let's take a look over at the chart. You know, they've gone through their accumulation. They've had their reaccumulation patterns as well. So if I were to share this here, let me make sure that shows up. They went through reaccumulation. There is a little bit of a buying climax that's showing up around this $100 range. So, you know, it's something that's poised for the future. PE ratio around a 59 is what it says on TradingView right now. But they've got a solid income statement. Net margin quarterly at the end of Q4 of 2024, they had a 90% net margin, which is ridiculous. They tend to jump a little bit when meme stock mania comes back. A lot of and crypto too, because they do trade on their platform. They're making some money off of that. So in terms of the stacks side of things, we do see some calls being purchased. We do see some calls being sold. Nothing in terms of exact directional. In terms of the buying of the unusual stuff, I will say it has more of a bullish sentiment when it comes down to it. But keep in mind too, some of these, you know, 100K, you know, this one 500K, aiming for the 15th of this month. There is a little bit more of an upside when it comes down to what Stacks is saying here. It is one of those names, just like the rest of them that we see this week. Keep an eye out for what comes in tomorrow, Tuesday, and Wednesday before close. What you want to see is them trying to get into some positions right before the close. Those are the really interesting ones. If you see a gold and blue bar show up with, 12.59 for me, because it closes at 1, or 12.51. These ones right before close are the interesting ones that you usually want to keep an eye out for, especially when they're doing it right before the earnings report's going to come out. Okay, so we've got a lot of these earnings coming up this week. Keep an eye out for those. Max and I will continue to do our write-ups in our Discord. So if you're in our Discord, let me share this with you real quick. If you're in our Discord, or if you're in Stacks, you guys can see in here on the left side, eRoo trades and TG trades. That's Max over here. All of these will be posted throughout the rest of this week. If you're watching us because of Instagram, Twitter, Threads, any of those, feel free. We will be doing additional live streams throughout the rest of this week. We're going to try to make sure that you guys get as much information as we possibly can share, especially with things like stacks and what prints show up. So yeah, we will see you guys. We'll try to aim for noon tomorrow. Noon, I'm on Pacific time, West Coast over here in California. So if you guys can join us, we'll make sure that we not only review tomorrow's before open ones, all our predictions that we made, see what played out, what didn't. We'll talk about and view what's coming up after the close as well, and then help us get ready for Wednesday and Thursday prints that are showing up. Man, these live streams are getting long, almost 2 hours each time, but we have so much to go over this week. Really hope that you guys enjoyed this, that you guys are getting something useful out of it. If you guys are still around, please comment for us stacks or any of those tickers that you guys are thinking about getting in. We'd love to hear. Our goal here, Max and I have always said, we're just going to go on stream. We're going to have a conversation, pull up the data that we can, try to make sure that you guys are aware of what's being said and what's being shown, so that you guys can make more educated decisions upon these positions that are being taken. We will make sure we review everything tomorrow, discuss what we predicted, discuss what actually happened. Really quick before we log off, let's peek at waste management and Tilray. Waste management looked like it had a little bit of a pop and then came right back down. So movement was kind of flat overall. 0.56% after hours. Tilray has dropped. I don't think that was it. Oh my God. Look at that surprise. 5,431% below the expectations for their earnings.
So they were expected to lose 2 cents and they lost $1.28.
Oh my God. That is ugly. That is ugly. Yeah, like we've said, a company can go through accumulation phases and look like they're doing what, but until they're able to make money. And I'm going to point out Palantir, Carvana, Robinhood, those ones, if you look back on their accumulation processes, when they started to report positive earnings is when they really start to shoot further up. So I will say, down for in the future, especially when you see a company, I'll use Open as an example, where it shoots up like crazy because of hype, because of a short squeeze. If their balance sheet isn't good, they will eventually distribute and come back down. It's when they are able to make those positive returns, they are able to show some green on that income statement, that's when you'll start to see the accumulation truly start to play out. So Tilray, until you guys can make some money for your investors, is going to stay chopping around in this lower zone. Not surprised to see it come right back down. The question is, will we see it start to get scooped up, or will we start to see some sort of legislation being pushed that makes it, worthwhile for these investors to continue to make money off of this? But as of right now, they're a losing company. So that was an ugly, ugly earnings report for Tilray.
Waste management, they cut fiscal year sales outlook.
Okay. They had a double beat.
That's why
small double beat. But yeah, guidance was a little bit poor. So post market still up just $1, but that's what, 0.56%. That's nothing. So we'll review all the Tuesday or Monday after close. We'll see what this opens up at tomorrow, but we got some Tuesday before open reported tomorrow, so we'll go over that during our closing bell show tomorrow. We'll spend about an hour, reviewing stuff and then getting ready for upcoming plays. Then after close, we'll keep an eye out for all the ones that are reporting, because there's a lot to go over. But we'll do this all week for you guys. We're planning on doing a closing bell show. We did ours today. We plan on doing it tomorrow. We'll do our Wednesday usual one. and it's very likely Thursday because we do have Apple and Amazon reporting. MicroStrategy as well. We'll probably do a closing show just to monitor those two for you guys. All right. As always, if you guys want to get in on stacks, we do have the code July 2025. It's only going to be available for another day or two, so I would make sure you guys jump on that as soon as you can. 25% off your annual membership. For if you're not going to join Discord right away, if you still want to feel things out with stacks, you guys can get some of Max's write-ups on his Substack. The link is below in our description box. Same with his YouTube. It is stuff that we do cross-post between Investor Central and on his YouTube as well. So you guys go ahead and subscribe to that there. I did not get my Beehive write-up sent out yesterday, but I will be working on that throughout the day today to get you guys ready for all of the stuff that we talked about this week. So happy trading, you guys. We will see you guys tomorrow. If you guys are watching this after the fact, make sure that you guys let us know. Is there anything you guys got into? Did you make some money, lose some money? Let us know. Always happy to make this a community where you guys can talk to us about it. All right. Have a great one, you guys. We will see you guys tomorrow, and we'll see you guys in the Discord for those of you that are in our subscription and our Stacks software.